When you deduct depreciation and amortization from your EBITDA, what you get is EBIT, that is earning before interest and tax, and this EBIT is also known as operating profit. Remember, EBITDA is known as cash operating profit, and EBIT is known as merely operating profit, and that is because you have deducted these non-cash expenses while calculating the EBIT. From the EBIT, you will deduct the finance cost. So remember, in a business, you will borrow money. You may borrow money for a project. You may borrow money for working capital. So it doesn't really matter whether you are borrowing for a project or you are borrowing for working capital. Whenever you borrow, you pay interest. So the interest that a company would pay in the income statement, it would appear here as finance cost. Please remember, you may call it as finance cost, you may call it as interest cost, or you may call it as borrowing cost. All of them mean the same thing. So you deduct the finance cost from your EBIT. What you get is known as in earning before interest, earning before tax, and extraordinary item. Now, what is extraordinary item? Again, very simple. What is extraordinary? Something which is not ordinary is extraordinary. What is extraordinary? Something which is not ordinary is extraordinary. So remember, in a business, what can happen? There is a land that your business is holding for quite some time, somewhere. And that land you had purchased 50 years ago for 2 crore of rupees. Today that land is worth 100 crore of rupees. And you realize that over next 50 years also, you're not going to use that land. And therefore you decide to sell that land. And when you sell that land, you sell it for 100 crore. So your cost was 2 crore and you are selling it today for 100 crore. That means you are earning a profit of 98 crore on account of sale of this land. Now tell me, this profit that you are earning of 98 crore, is it your ordinary profit or extraordinary profit? Obviously, this is your extraordinary profit because this profit is not coming from the ordinary activity of your operations. And therefore, it is shown separately as profit on sale of land. And let's say that figure is taken here as 50 crore. Likewise, what can happen, sometimes in a business, there is a fire. And because of that fire, the entire godown is burnt. And there's a loss of 20 crore. And what the insurance company has done, insurance company has reimbursed you 8 crore, but you still have suffered a loss of 2 crore. Now, is this loss of 2 crore that you are suffering on account of fire in your godown, is it your ordinary loss or extraordinary loss? So obviously this is your extraordinary loss because this is something that would not happen every now and then. And therefore, this loss also you will show as a separate item, and that is loss on sale, on a loss of asset on account of fire. And that is what you will deduct, and this is what you will get earning before tax, that is your EBT. From the EBT, you will deduct your tax. And remember, what tax do you deduct? You deduct only one tax, and that is your income tax. That is your income tax. Now this income tax is also called as corporate tax when it is paid by the corporates. Since we are talking in the context of the corporates, so the same income tax is also referred as corporate tax. So you deduct the corporate tax, and what you get in the bottom is known as your earning after tax. So earning after tax यानी कि EAT. EAT का क्या मतलब है? EAT का मतलब है कि अगर आपके बिजनेस में ये फिगर पॉजिटिव है तो आपके बिजनेस में आप ईट कर सकते हैं, अदरवाइज आप ईट नहीं कर सकते. So that is your profitability, and that is how we understand profitability for the purpose of decision making, for the purpose of risk management, for the purpose of value creation, and also for the purpose of performance evaluation. So if you have any question, please go ahead, else we move to the next item.